You're listening to Carrie Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to watching the Financial Survival Network. Well, as we sit back, watch the markets melt down, sometimes rapidly, sometimes slowly, but the trend seems to be inexorable. Well, the baby has been thrown out with the bathwater. The price of precious metals, well, gold in particular, has been pretty resilient considering what's happening all around it. And yet, the mining stocks, the sector in particular, has been thrown out with the growth stocks and everything else. Well, here to give us some insight, what it's going to take to see a rally in the sector is our good friend, Gwen Preston. You find her at resourcemaven.ca. Gwen, it's great to have you back on the show. I saw you in Vegas recently. Man, we're just taking a total beating. These mining stocks have always been the redheaded stepchild, but now, until they're not, of course, then when they're no longer the redheaded stepchild, that's when you make the money. But when is the day going to come?
Oh, isn't that the question, Carrie? Thanks for having me on. Things have changed a fair bit since we were in Vegas just a month ago, right? Not even. I mean, yes, it's insane out there. Like you say, gold has done pretty darn well, especially given what's gone on in the US dollar, right? Which is a direct force against gold. So, I mean, gold is holding in, and today, after Wednesday's really bad day in the markets, today gold is actually climbing quite notably, all within range. It's not breaking out to any new highs or anything like that, but it's getting that safe haven bid. And I think that what it's doing today is kind of a reminder of everything that gold has been for the last while. So go back to COVID. From COVID until the end of 2021, gold got good bid. So $23 billion flowed into gold-backed ETFs over that time frame. It's a huge amount of money. That's what pushed gold up to $2,000, right? And that's because, so much uncertainty, everyone wanted a little bit of insurance in case we don't know what, but it was a weird world. But at the same time, if you can believe it, $1 billion flowed out of mining stocks. That was the net situation. And I think, to me, what was going on there is that the broad markets were still doing what the broad markets have done, and even more so for the last decade, which is growth and risk were being rewarded hand over fist. So while investors wanted some insurance, they wanted some safe haven, they bought some gold as their insurance, they didn't feel the need to buy gold stocks because they could buy, I'm being a bit facetious, but they could buy monkey NFTs or whatever it is that they were buying, and that was doing really ridiculously well. What, of course, has changed in the last 2 months is that reality bites, inflation is very real, and everybody realized the Fed put is dead, that the Fed is going to raise rates, market reaction be damned, until inflation comes under control, because you can't steal people's purchasing power to the extent that inflation is doing it. You got to try and turn that ship around. And when that reality hit, that's what's changing the risk sentiment, right? And I think what compounds that is that all kinds of tech stocks super outperformed during COVID for two reasons. First of all kinds of people were sitting at home and had money and time, and so they were pouring money in, and so they were chasing the things that were doing well, and those were the big tech stocks. And secondly, big tech specifically saw outsized buying during COVID because everybody needed subscriptions and iPads and all these sorts of things to function from home. So big tech got this insane surge during COVID, and both factors of that are reversing now. So the risk sentiment is reversing, and all that buying was just pulling forward future demand that now is not there. And so all of these things are coming to a head. And then we get the consumer stuff, the Walmarts and the Targets, and that's inflation doing what inflation does. So we're in a storm for sure. I don't know what the shape is of the downside that we are entering. To put it succinctly, I think the next few months are going to be no fun. I don't know whether that fun will be a deep or sharp downside, or whether it will be a grinding move lower as we just get through this reality. What I think matters for mining stocks, which is getting back to the question you actually asked me, I promise I'll get there, is that people didn't buy mining stocks when gold was doing well because they didn't need it, because risk was the thing. If we get to the other side of this storm and risk is no longer the thing, which I think is likely, I think we could be entering an actual transition from growth and risk to value. If that's the transition and we come out the other side of this storm with investors more focused on value, then I think we have a double whammy in a good way for mining stocks, because then you have the value argument with the very bullish fundamentals for the metals and investors interested in exactly that kind of play. So, but it all sort of depends on the shape of this storm that we're in.
All right. So in the past 10 years, we've seen cryptocurrencies. I call them kleptocurrencies. People make fortunes up until recently, make and lose fortunes every week. And you're an action junkie. This is it. And then we had NFTs. And then we had all these growth stocks. And here in our sector, you want to build a new mine, you literally got to walk on glass for a decade. And this instant gratification of getting 20, 30% returns consistently in the FANG stocks, in cryptocurrencies. Do you think it has kind of messed up people's attention spans and the idea that you might actually have to build for the future, and that things that take planning and time, in the oil sector, hey, you find a target, you're producing, if it's good, in 18 months. In our sector here, it seems like a lifetime.
Yeah.
These mines that are like being planned now are going to be producing long after I'm gone. And I got a few years on you, but you know what I'm saying.
Yeah.
The cycle is out of touch with conventional or current investor expectations and timing. And that to me is one of the biggest factors here.
I totally agree. And that's why I think how risk sentiment is when we exit the storm that we're in, that's the biggest question for me. And I characterize it as risk sentiment because I'm using that as a catch-all for exactly what you're describing, which is that investing for the last decade, this isn't just a since COVID phenomenon. COVID has been the most crazy part of it. But it's really since the great financial crisis, since this concept that we could just not worry about risk because monetary policy could kill recessions, which is what has happened several times, right? Since 2009, that the whole way that investing happened during that time frame is you just could buy, growth or tech or even just market ETFs. You could add some spice to your portfolio with even riskier things like NFTs or crypto if that was your thing. And it all worked. No matter what you did, it all worked. And yes, I do think that has impacted investors' timeframes, approaches, mentalities. I mean, if you go back a decade, Warren Buffett, there was a lot more people who followed the Warren Buffett approach to investing. And there's a huge number of people now who I don't think put a lot of value into it. So this ship is going to take a long time to turn around. And I think it has to, because that risk growth, crazy way of being can't last. Tech stocks became insanely overvalued. There's so many specific examples that we could go into with that. So I don't think it can persist. I don't know how long it's going to take for that to change. And there's probably one of the things that I'm sure you and I have both learned is that it takes hard lessons to understand, right, some of these things. And so a bunch of people who have done very well in the markets and haven't had to really learn those bad lessons since 2009, they may be getting their first lesson now. And that's the kind of thing that can change your approach. So it's going to be an interesting few years, honestly, in understanding investor mentality. I totally am with you on that.
Couldn't agree with you more. And, our good friend Rick Rule always says, never mistake a bull market for genius. And, the dopamine's flowing. There's few things in life as pleasurable as looking at your portfolio every 15 minutes and seeing it go up. And this appification of finance, where all of finance, whether it's fintech, whatever, all of finance now has been reduced down to apps. Mm-hmm. So you don't even really, it's like in Vegas, they give you chips. So you're not thinking about money.
Yeah. Here it's just on your phone and you're in your own bubble. You don't have to interact with another person, a broker. You don't have to have a conversation with anybody about anything that you're doing. You just do your thing.
Yeah. And hey, I'm tired of this crypto. I can just instantly go into another. I don't like this stock anymore, or something happened and this other stock looks better. You don't have to talk to anyone, nothing. You just click a couple of keystrokes or swipe right, swipe left to get rid of the stock, swipe right to buy it, right? Yeah. And it's kind of, investors have really become detached from reality.
Don't just survive, thrive. The Financial Survival Network.
Fury Gold Mines is a Canada-focused exploration and development company committed to aggressively growing its scalable, high-grade gold assets with major drill campaigns planned across its 3.5 million ounce portfolio. Fury is led by a management team of proven explorers and developers with a track record of success in advancing and financing project development. Fury Gold Mines is well positioned to create value for investors with low-risk development growth and the potential for a new major discovery. Fury Gold Mines trades on the TSX and NYSE American under the ticker FURY. To learn more, go to furygoldmines.com. That's furygoldmines.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
I think another interesting part of that is just like how information flows in the investment world. If you go back 15 years, just to, make it a long enough time frame, brokers were the main conduit of information to investors. Investors had a person that they talked to, whether they were very low risk investors, largely in mutual funds, or whether they played the stock market. It was all, you did it through your broker. And then a lot of your ideas came from your broker or brokers. And a lot of your data, your research came from that as well. And then, with the advent of the kinds of things that you're talking about, all the apps and all of the, no commission online trading and all of that, it means that conduit is largely broken. That's not the main flow of information anymore. And instead, the internet is the main source of information, for better or worse, right? There's advantages to that, but there's also disadvantages to that because everybody has their own motivations for saying the things that they're saying. And again, there's all kinds of examples of this over the last little while, everything to do with Reddit stocks. They're not about finding value. If you want to talk about the opposite of Warren Buffett, they're not about finding value. They're about slamming short positions in funds, which is a very specific goal that I guess can work when it works, but has its weaknesses as well. So yeah, the whole flow of information, the insularity of people's actions, it's a different world out there than it used to be. So yeah, the sentiment and outlook and approach from investors is paramount.
It used to be once upon a time, many years ago, people would buy savings bonds that yielded 5% government statutory rate of interest, and they'd throw them in their safe deposit box or their safe, and they would actually wait for the things to mature and cash them in.
Yeah.
And then people used to have mortgage burning parties. So their mortgage, they paid it off after 30 years. And they burned the mortgage and everyone in the neighborhood came in. Now, burn your mortgage. Are you crazy? It's time to refi.
Yeah, exactly. And pour it into FANG or whatever.
Yeah, into safe investments, right?
Mm-hmm. Right.
So margin of safety, investor timeline. So if everybody has become an instant gratification investor, then you can become a longer term, at least a medium term investor. It seems to me you have a tremendous advantage.
Yeah. And I think that that's actually the most important message right now. There's a slew of conferences here in Vancouver over the last few days. They're resource conferences. I gave a bunch of talks. And of course, I stood up there and said, I don't know what the next few months are going to bring, right? I think it's going to be bad. I don't know how bad. I don't know what shape the bad. But my counsel was, think about what your medium-term convictions are. And I mean, my medium-term convictions are that the green energy revolution represents a paradigm shift for metals demand, especially copper, nickel, uranium, but others as well. There's insufficient supply to meet that demand. So I think that those metals are set up fundamentally very well. And if we get an investor sentiment shift to value instead of risk and craziness, then that will compound the benefit. But even if we don't, those things are going to do well because they have to. You can't green the world without more copper and nickel. There isn't enough nickel for demand in 2024. That's only 2 years from now. So that medium term, I think, that's what I need to hold on to right now because I don't know what's going to happen tomorrow and things are pretty crappy out there. I also believe in gold. And, I think the fact that there was all that safe haven buying of gold, the metal, even when markets were still going crazy, really underlines that it is the go-to safe haven. And if there's going to be a dramatic change in how investors approach the market, which makes sense, right? We have been in a supportive monetary environment for 12 years. Yeah, there was some tightening in 2016 to 2018, but that barely counts, right? That wasn't a real thing. We've basically been in a supportive economic and monetary environment for 12 years. Now we're not. It's different. The whole game is different. And I think even though it's weird and uncomfortable, investors are going to have to change their approach. And I think those medium-term convictions and fundamentals and value are going to have to matter. So that's what I'm doing. And maybe I'll be wrong, maybe I'll be right, but I have to make a choice and have a plan, right?
Yeah, well, I'm inclined to agree with you because there's going to be a shortage of all these things. There's no question that you need for the so-called green revolution. At the same time, the people that want the green revolution hate mining. So they're tying up the whole process of this transition. But the greatest boost to the green revolution is I don't even know what your prices are in Canada, but we're over $4 a gallon gas. In the U.S., premium is over $5. There's talk of gas stations in Washington State have added another digit to the gallon price of gasoline, which means $10 gas. And I don't doubt it. And that is pushing more people into electric vehicles. I mean, myself, I've got one. And on the app, it shows you your charging stats. And every month it shows me how much I saved not buying gas.
Yeah,
it's totally cool. So I think that's the biggest boost is these high prices. Now we can argue about exploration and
the impacts of mining and, the not in my backyard and whatever. Yeah, you can argue about it. But at the end of the day, you can't green the world without these metals, and we can't get them from recycling. Demand is going up net, and so we need to feed that.
Yeah, and the current policies, even if they change today, and everybody said go full tilt, we'll start permitting these mines in 18 months. Even if they did it today, it doesn't matter because the shortage is baked in the cake, and this is for dozens of resources. That's why I'm such a raging bull. Long term, unless we go back to caves, this is the stuff we need. We can't live without it, and we have to have it. So.
Yeah, I totally agree. So, I think that's why I just talk about medium-term convictions and long-term convictions and using this storm to make sure that you are positioned for those, because they could run slowly out the gate after this storm. They could run quickly out the gate after the storm. It all depends on the shape of the storm. And so I'm not going to try and make an accurate, or a clear prediction there, but I think they are going to go. I think that there's almost no argument that they are going to go. Like you say, it's even if they started permitting mines tomorrow, I think there's a quote from one of the analysts at Goldman Sachs who's like, no amount of money could create the nickel mines that we need in the next few years. Like, it doesn't even matter. Even if the taps were endless, we could not have the nickel that we need in a few years. That's a pretty major statement, right? So it's hard to have conviction in much right now, but I think it is possible to have conviction in metal prices.
You just have to follow the trends. And, a lot of times the fundamentals say one thing, the technicals don't agree. But there will come a time where the fundamentals and the technicals agree. And at that point, it's a load up the truck. Hey, Gwen, tell us about your site, how we sign up, what you can give us.
Oh, thanks for the opportunity. Yeah. So I publish a weekly newsletter called the Maven Letter, which is about what I'm buying, selling, and thinking in the metals and mining space, from exploration all the way through to production. You can check it out at resourcemaven.ca. And I'd be happy to, my contacts there, I'd also be happy to entertain any questions that anybody might have.
All right, excellent. And if you do have a question for Gwen, you can always shoot me an email, kl@kerrylutz.com. We'll get you an answer. And while you're at the site, Financial Survival Network, you can click Gwen's link and sign up for your free newsletter. Gwen, always a pleasure. Thanks so much for taking time out for us today.
Thank you so much for having me. It was fun.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.